Hello, good afternoon. Again, my name is Dr. Stanley Okoro. I am the president of ANPA Foundation. I want to welcome you guys to another round of ANPA Financial Webinar Series. Well, today we have a very interesting topic, the best kept secret in real estate. I want to hear all about this because we haven't really entered this before. This is very interesting to me personally. Today is our 46th financial webinar since 2020. It's a big deal. And before we get into that, let's talk about ANPA briefly. Just talk about what ANPA is. As you guys know, ANPA is the Association of Nigerian Physicians in the Americas. Our president is briefly occupied, but he'll be joining us very soon. ANPA is a 501(c) organization incorporated in 1995. We represent over 8,000 physicians, dentists, and allied health professionals of Nigerian birth, ethnicity, friendship. Anybody can join ANPA as long as you're a friend of ANPA. So ANPA has many membership benefits, including professional development. Next week is our 32nd conference in Chicago. We're going to rock Chicago. There's a lot of opportunities to ANPA in leadership, opportunities, practice referral, networking. As you guys know, Nigeria is one of the largest diaspora groups in the United States. So our networking is strong. We support each other in terms of need and joy. We just came back from a medical mission, which was amazing. Lots of opportunity for volunteerism and practice management and development, which is kind of what we're talking about today, how to take it to the next level. If you want to connect with ANPA, there's many ways. Website is anpa.org. We do have social media, as you see on the screen. ANPA has a sister organization called ANPA Foundation. ANPA Foundation it runs the financial webinar, and we have our own goals, purpose. Our purpose is to raise funds, create financial independence for ANPA via philanthropy, estate planning, business investments. This is one of them. We are also plan to create sustainable systems of healthcare in Nigeria and beyond. And our third goal is to educate ANPA members about personal or business investment, tax strategies, estate planning, multi-generational wealth, legacy, and philanthropy. We have these webinars every quarter, but every once in a while we do a lot more depending on what's going on. So usually at 12:30 on Saturday morning. This is an intentional aggregation of subject matter experts. We think this is the highest and best use of your time on Saturday morning. It is free to ANPA members, and we encourage you to share, send messages to your friends now to join, because this is something that we haven't entered into. Other diaspora group own the hotel business, but we're about to crack this today. So with that, I'm just going to give you a little disclaimer. The materials presented at all ANPA webinars is for general education and information purpose only, and is solely the opinion of the presenter. No webinar is intended to provide you with personalized financial or legal advice. It is left to your discretion and judgment, and it's your sole responsibility to determine what's necessary for your practice. Neither the speakers or ANPA can be held responsible for the materials, opinion, or any inadvertent error or omissions in the preparation or presentation of the material. Furthermore, nothing in the material should be construed as an endorsement by ANPA. With that being said, I am happy to introduce our speakers today. Today, I am happy to introduce Dubi, Ajukwu, and Chuchu Ajukwu. They are twins. I want to hear more about that. So, Dubi, are you ready?
I'm ready, sir.
All right, show us your face, Dubi. We need a face
Put
behind
a
the
face to the
name.
name.
We have a face behind the name. Chuchu, show us your face.
I will. I
All
will.
right, there you go. All right, you guys take it from here. I'll advance the slides for you. Tell us about yourself first.
So Chuchu and I are twin brothers. obviously Nigerian, but spent our formative years in the UK. Both went to school in the UK at the age of 8 to 18, and then both came here to the States, to Dartmouth in 2006. And, after Dartmouth, we were investment bankers, private equity professionals, and then both went to graduate school at Harvard. And after that, that's where we started our real estate professional careers. And, we launched VANA approximately 4 years ago. And we'll tell you guys all about that.
All right, before you
Exactly.
tell us about it, I do want to recognize one important person in our group, our national president, Dr. Cliff Eke. He's, are you able to unmute to say hello, Dr. Eke? I don't want them to fire me, I got Dr. Eke, are you able to unmute? I don't think he can hear us. Well, we are going to proceed until he is able to unmute. Thank you. Go ahead, Dubi.
Fantastic. So picture this. March 2020, every asset class is in a free fall. Hotels are shuttered, flights are grounded, real estate investment trusts are down 40%. But somewhere outside Atlanta, there's an 120 room economy extended stay hotel that is running close to 90%. Not because of luck, but because of those who are staying in the rooms. Traveling nurses on 13-week contract rotations, construction crews finishing a logistics warehouse, families in temporary housing provided by insurance. While the rest of the hospitality industry collapsed, economy extended stay hotels did very well. In fact, revenues grew by 8%. This was not an anomaly. These hotels have performed well over the last 20 years. We're not here today to pitch you on a hotel. We're here to introduce you to an investment that acts like a necessity. These assets are recession resistant, workforce driven, and consistently in demand while generating very good cash yields and have some of the most favorable tax treatments in the whole of real estate. Institutions like Starwood Capital and Blackstone have figured this out decades ago. Mom and pop operators have quietly profited from it from decades, but most high-income investors do not know the space until this afternoon. This is why we labeled this talk the best kept secret in real estate, economy extended stay hotels.
Am I on the right slide?
No, can you go one slide before, Dr. Stanley? One slide
before.
before. Exactly.
Okay.
So as you can see it, the Wall Street Journal wrote that extended stay hotels print money for investors in COVID-19. We didn't write this headline. Even the Wall Street Journal recognizes the attractiveness of this asset class. And what is interesting is that this headline wasn't written in a bull market. This was written in the depths of COVID-19 when we were in a recession, yet these hotels thrived.
Next slide.
Thank you.
So who are we? I touched upon that briefly. VANA Partners is a platform that was founded by my twin brother and I, Chuchu. We're business partners and we're also backed by Starwood Capital. Starwood Capital, for those of you who don't know, is a globally recognized private equity firm that manages around $120 billion in assets. They're a strategic investor in our platform, and they also own Extended Stay America, which is the biggest pure play extended stay brand in the whole of the United States. Prior to starting VANA, Chuchu and I worked on Wall Street. Like I mentioned, I was an investment banker at Morgan Stanley. Chuchu was at JP Morgan. We both did private equity. We both went to graduate school at Harvard. And after Harvard, that's where we began our real estate careers. I learned the business at the Related Companies, which is a big developer here in New York City. Chuchu cut his teeth at Tishman Speyer. And then, like I mentioned, in 2022, we started VANA Partners. Next slide. So for those of you that aren't familiar, an extended stay hotel sounds exactly like the name. It's a hotel where people stay for extended periods of time. I would say that the defining feature of an extended stay hotel is that it typically has a kitchenette. So that allows people to stay there for extended periods of time. The typical guest profile is in the slide. You typically have construction crews that stay for longer term assignments. You've got traveling nurses who stay in these hotels. You've also got business travelers or people who are relocating who need some form of temporary accommodation. And then you've also got value conscious travelers. These are travelers that are staying in new cities for extended periods of time, and they want to stay in hotels that are very affordable or a form of temporary housing. So to the right of the slide, you'll see some of the defining features of an extended stay hotel. Like I mentioned, typically has a kitchenette. That's what allows people to stay for extended periods of time. In the segment that we are in, housekeeping is provided once every 2 weeks. So this is very different to a transient hotel where housekeeping is typically provided on a daily basis. Housekeeping is provided on a biweekly basis. Guests do their own laundry, and you have very limited amenities. Typically a very basic fitness center, and nothing else. And the defining feature about this segment is that the rates are flexible. Typically, it's more expensive to stay for a shorter period of time. These hotels typically try and encourage people to stay for longer periods of time. So as a result, the longer you stay, the cheaper these hotels are. In the segment that we are focused on, and we'll talk a little bit more about that, in the economy segment, we typically charge $60 to $80 a night. So it's pretty competitive when you compare it to multifamily product. Next slide. So just to kind of situate where we kind of sit within the hospitality industry, you'll see that you have hotels that are typically transient. And what that alludes to is essentially hotels where people stay for 1 to 3 days. So I'm sure you guys are all familiar with these types of hotels, the Marriotts, the Hiltons of the world. You typically stay there for 1 to 3 nights. Obviously, the more expensive hotels have better amenities and services. But as you go across the chain scale, it becomes cheaper with limited services. We're in the extended stay segment. And like I mentioned, these are hotels where people stay for extended periods of time. Our focus is actually on the economy segment. So that's to the far right. So the hotels are very cheap, like I mentioned, 60 to 80 bucks a night. And typically guests are staying for very long periods of time because frankly, we think these hotels, function as a form of housing as opposed to a conventional hotel. And so at the bottom, you can see that economy extended stay hotels, offer affordable rates, but they also have a very lean operating model with very limited services and amenities. So why do we love economy extended stay hotels? Why did we quit our fancy jobs on Wall Street to start this platform? It's really because of its performance during the pandemic. Like I mentioned at the beginning of the pandemic, a lot of hospitality assets were doing very poorly, but these economy extended stay hotels did very, very well. And that kind of piqued our interest. And as we kind of dug in, we quickly realized that the hotel moniker is a bit of a misnomer. And we really view these hotels as a form of workforce housing. So in the slide, you can see the 4 reasons why we love this business. It's very resilient. During the pandemic, revenues were actually up 8%, while the broader industry fell by 17%. Demand exceeds supply. There's a secular trend towards people actually demanding this type of product, and supply can't keep up with the demand. Thirdly, it's a very profitable business. The margins are 20 to 30% higher than a conventional hotel, and that is really due to the lean operating model. Like I've mentioned, the amenities and services that are provided are very little. Housekeeping is provided once every 2 weeks. There's no food and beverage. There's no room service. Guests do their own laundry. So as a result, a lot of the revenue falls to the bottom line. And then lastly, we think this is a very resilient asset class. It really performs more like housing than a hotel, and guests stay for extended periods of time. Next slide. So to summarize, we kind of think this asset class takes the best of both worlds. I'm sure a lot of you here are very familiar with multifamily investments, obviously a very well-known asset class where it has predictable revenues, very low operating costs, typically easier to manage because, tenants are staying on long-term leases. But the cons are that it's very competitive and the yields typically are lower. And there's a lot of competition from institutional capital. Hospitality, on the other hand, what we like about hospitality is that it does offer higher yields, albeit being a riskier investment. And due to the fact that you can charge on a daily basis, you can take advantage of demand patterns, right? So in certain markets, when there are key events, you can raise the price to, accommodate that demand. And it's also a very fragmented industry. It's maybe not as institutionalized as the multifamily market. The negatives is that it's very operationally intensive And like the pandemic showed, it's sensitive to recessions and pandemics. We think extended stay hotels mesh the best of both worlds. So you're able to get the favorable characteristics of both asset classes. Next slide. I'm sure your accountant will press all of you guys on this issue, but similar to multifamily, hotels, provide some of the favorable tax treatments associated with real estate investments. I'm sure a lot of the audience is familiar with some of the tax benefits associated with real estate investments. But as you can see in the slide, you get accelerated depreciation. Typically, hotels are depreciated over 39 years, but with a lot of the furniture and equipment in hotels, you can actually get the depreciation over a shorter time frame. So in 5, 7, and 15-year schedules. These hotels are also eligible for bonus depreciation, so you're getting a lot of the tax benefits in year one. And then in certain cases, if you qualify for Section 199A, you can even get additional tax benefits. So not only are you investing in a very resilient asset class, but it also provides favorable tax advantages. And so just to kind of put some numbers to what we've talked about, like I mentioned, these hotels are very cheap, typically charging 60, 80 bucks a night. We typically buy assets that cost 80 to $100,000 a key. And the yields you're getting are 12% on a levered basis. This is very stable cash flows. Like I mentioned, it's an extended stay hotel. These hotels typically run 80 to 90% occupied with an average length of stay of 10 to 14 days. And so as a result, you've got an asset that is able to generate, cash yields of 12%, but levered IRRs north of 20%. And in our underwriting, we tend to take a very conservative approach. So you can see that in our exit cap rate assumptions, we are around 8 to 9%. Sometimes these assets actually trade as low as a 7%, but typically we underwrite very conservatively and hope to outperform our initial underwriting. So I tried my best to go through that very briefly, but if anyone here has questions, Chuchu and I are more than happy to answer them.
Well, Dubi, thank you very much for that wonderful explanation. We're going to dive deep into more with our questions and answers. We normally would ask people to raise their hands. So there are 3 ways to ask questions. One, you can raise your hand. I see a hand raised already. You can put it on the chat where I will ask for you, or you can request to unmute and you can ask your own question. Since I have the mic and I have the right to ask the question, I'll ask first question, okay? So, a lot of us we've been dabbling in multifamily housing and things like that, apartments and single. A lot of people here also own single family housing, right? What would you say to somebody who's skeptical about the hospitality industry? Because we have friends and Indians who dominate the market, right? So how do we compete with them? So explain, please.
First of all, I would say that the most important thing to recognize is that this is not true hospitality. I think that's the key thesis of our investment approach here, that the hotel designation is a little bit misleading. We really view this as a form of workforce housing. And I think over the last 20 years, these assets have performed very strongly through various economic cycles and shocks. So I think there's a lot of data and performance that supports our thesis. And so I would implore people to really kind of learn a little bit more about the space, and you'll quickly see that these assets have always performed well through economic cycles. Secondly, I would say when you visit these hotels, you quickly realize that it's not the type of hotel you're typically used to staying at. There's no room service. There are no fancy amenities. These hotels are run very lean with 6 to 8 full-time employees for 124 keys. So as a result, I do think that if you study the data, I think it supports our investment thesis. But I think more importantly, if you take the time to go visit these economy extended stay hotels, you will quickly realize that it's more similar to housing than a traditional hotel. Chuchu, I don't know whether you have anything to add.
Yeah, no, I would want to say that we also shared that initial skepticism too, right? Me and Dubi, Dubi didn't mention it in his talk, but we are not from a typical hospitality background either. Our experience was more in the traditional asset classes of office, multifamily, and industrial. But when we visited these assets, it was very hard to ignore that these essentially felt like multifamily buildings. And the characteristics that you see in these hotels, high occupancy of 80 to 90%, margins that are closer to 50%. These aren't typical hotel um, statistics,
Metrics.
right?
Yeah.
A hotel stay, all of us have stayed in hotels. You are staying there for 1 to 3 nights maximum. It's either a long weekend or a weekend visit to see family. These hotels, you will see people who have essentially moved in, right? They have posters on the wall. They have schedules on the wall. They have family pictures lined up on the desk. These are not things that you see in a typical hotel. And I think when you visit, I think visiting is one of the best things you can do. And obviously we're here, we've spent 4 years learning the space, so hopefully that you don't have to. And I just want to quickly say that part of our mission with this, and I'm glad you alluded to it, Stanley, is that Indians, and Dubi mentioned it too, there are a lot of people who have made money in this space. And quite frankly, a lot of them don't look like us. And it's not because it's not a great space, it's just we haven't been educated. And so part of our mission too is we hope that by showing and helping you guys invest in this space, that you will also become investors outside of through VANA Partners, because that way it's better for our community in negotiating and meeting with these brands that, hey, this cohort that you haven't catered to can be a big growth avenue for the brands, and it only helps because it's all self-reinforcing. We want to do business with people that look like us. Nothing would make us happier to team up with other investors that look like us, to have property managers that look like us, instead of depending on, another race or culture.
And an interesting fact is that 20% of hospitality workers tend to be Black and brown, yet 2% are owners. And so that narrative and dynamic also needs to change. But to just, accentuate Chuchu's point, it's a great business opportunity. And I don't think there's anything that some of the more successful groups are different to us. I wouldn't say that they're more talented than us. They just have the exposure and the education for the segment.
All right, I have lots of questions coming in. Dr. Deborah Jua, do you want to ask your own question or do you want me to ask it? You go ahead. Go ahead.
I can ask it. Yeah, it sounds. Thanks for coming on. I appreciate you telling us about this. Sounds like a pretty good investment. My question is about the depreciation. I would guess, I guess, with the extended stay, this is most likely to be depreciation against passive income. So my question is it depreciating for passive income, and are there any opportunities to make it depreciation for active income?
Typically, I would say most of the people here, it would be treated as passive income. Unless you're designated as a real estate professional, you really can't offset active income. So it would be really passive losses against, passive income, or passive losses rather, to offset passive income.
Yeah. So there are no opportunities, I guess, to work with you guys to be active?
I think it depends on how many hours you would spend in order to qualify as a real estate professional. So it's not really something that I would say that we could explicitly provide. That would be up to you rather, to change your status as a real estate professional. But I do think the benefits of hotels is, like I mentioned, certain components are depreciated over a shorter time frame. So there's a lot of furniture and equipment in the hotel, and the schedule for that runs between 5 to 15 years. And so as a result, some of the tax benefits you can get come to you a lot sooner. And then obviously coupled with bonus depreciation, it's a meaningful tax shelter in the first year.
Okay, thanks.
Okay, thank you very much. The next question is on the chat. It says, how many units does your group have and what is your profitability?
Sure thing. So our platform, we do three things. We do ground up development. So we actually build from scratch. We actually have 3 hotels under construction. The first one will be opening in July in Daytona Beach in Florida. Typically, our ground up projects are pretty standardized, typically 124 rooms, and they cost around $15 to $17 million to build. What we're talking to you guys about today is really more about an acquisition strategy. And those key counts really run the gamut. So we're about to actually close on a deal in Atlanta this spring.
Yeah. ATL in the house.
ATL in the house. We're about to close on a deal in Atlanta, and that key count is 86 keys. Typically, we try and buy assets anywhere from as little as 75 keys to as much as 200 keys. And in terms of profitability, like I mentioned in the presentation, the NOI margins for these assets are typically around 50%. And what that really means for an investor, and I think what you're asking for is that if you were to invest money, we would expect you on a cash yield basis to make anywhere between 12 to 15% on an annual basis in true cash. These things actually cash flow and make money. But when you dispose of these assets, we would expect your IRR to be around 20%. I hope
Okay.
that answers your question.
Yeah, there's another question. As someone who's new to real estate investing, would you recommend this be my first time real estate investment venture?
That's a very loaded
Good question.
That's a very loaded question. I would say that with regards to what we're doing, we would love to just educate you a lot more about the space and be very helpful in kind of educating you about the segment, and hopefully you will be in a position to determine what you think makes sense for your portfolio. But I think one of the reasons why we like this business, and we'll keep saying this throughout the whole presentation, is that we do not think this is a hotel. We think this is a form of affordable workforce housing. So as a result, on a risk-adjusted basis, we think the returns are pretty compelling. If you were to invest in traditional multifamily, you're typically lucky to get an unlevered return of 5 to 6%. For these hotels, that unlevered return is closer to 10%. And we don't think you're taking that much more risk in order to generate those returns. But to answer your question directly, I think it's a case of what do you want your portfolio to look like and what's your risk tolerance. And as a result, I think you'll be able to figure out what makes sense for you. But
Yeah, I'll
obviously,
give
we're
a
biased
less.
towards what we're
Yeah, I
doing.
was about to say I've got to give the less biased answer. I think on a risk-adjusted basis, which is what Dubi ended his, spiel with, we honestly think this is the best real estate investment you can make because it has a lot of the safe characteristics of multifamily, but you do get this higher threshold of cash yield, which again, depending on your needs and what we like about this is that it's cash flow generating, right? There is no need for what we call a sexy exit to get a great return. You will simply get a great return from ongoing cash flows, which is again why this segment has been so hard to get into through acquisitions or at scale, or even for any investors, because the people who own these assets don't sell because they're making so much money from it that in order for them to sell, you would have to make a significantly higher bid than what you would feel comfortable for. So, in short, we think risk adjusted, this is probably the best investment you can make in real estate.
So one of the difference, like, I do a lot of investment in multifamily real estate, and then we always exit maybe after 5, 7, 10 years. So what you're saying, this one's when you owe this one, you don't want to exit. That's what you're saying.
In an ideal
Yeah,
world, we
well,
would want to hold forever because we think that these things cash flow so much. And, basically through the cash flow, you can return your principal quite quickly over a 5 to 6 year period coupled with refinancings. But obviously, depending on your investment philosophy, you can still underwrite these to a 3 to 5 year hold and make good money. But, if we had our own way, we would encourage people
to own these assets.
to kind of own forever because we truly believe that that's how you build generational wealth. You build generational wealth by owning. That's not to say that selling is not a good thing, but if you can take a long-term approach, and that's obviously our hope and our future plans is that we kind of want to own a portfolio of these hotels for a long period of time.
Got
You're
it.
about to say extended
All
period
right.
of
So
time.
the another question is, how do you invest in this kind of business? Because you're right. We are not exposed to these kind of opportunities, right? So how do you guys run into this? How do I invest in this kind? Like if I didn't see you guys, only my Indian friends went to business school, and every once in a while they invite me to participate. But if they don't know you, they don't invite you into it.
Yeah, the great thing about this business, and we kind of had to figure this out the hard way, is that you can basically go through two routes. You can basically go through what we would call an independent route, essentially, which is you create your own brand, you create your own extended stay hotel, you build a hotel with specifications that you think make sense, and you kind of run your hotel. Most hoteliers in the space, they partner with brands. So in this instance, we've partnered with Wyndham, who created the Echo Suites brand. That's right in front of you guys. And so we partner with Wyndham. And so Wyndham helps you a lot, right? They give you a prototype. So they give you the design for the hotel. In this instance, it's 124 keys, right? And they basically guide you through the process of basically building a hotel. They will actually recommend property managers. They will recommend general contractors who have built the prototype. That said, we think a unique advantage that we bring to the table is that we're actually real estate professionals, right? This is what we learned and this is what we've done for the past decade. And so by bringing, our real estate expertise, we believe that we are able to underwrite these deals a lot better, and we're a little bit more sophisticated in our approach. But I think the encouraging thing for everybody in this call is that there are a lot of non-real estate professionals who have done very, very well in this space. And so what you'll typically find is that a lot of these extended stay owners are not necessarily real estate professionals. I would actually go to argue that some of them have the backgrounds of individuals in this call whereby, they've made their money in a profession, they're a doctor, they're an accountant, or whatever else, and they've actually ventured into this space and they've leaned on the likes of Wyndham, Marriott, Hilton in order to build these hotels.
I would just add that I don't think it's intuitive, but hotels are a franchise business, like Dubi mentioned. So you can almost not think of it too differently than a Starbucks or McDonald's. You would go to one of these brands and be like, hey, is there one in my market? Now, like Dubi was mentioning, the brands do offer a lot of support, but you guys are only aligned up to a certain point, right? It's very important that you understand where the brand's interest lies and how they make money, right? So brands care about net room growth, right? Because they want to grow the number of hotels on their systems. And also you pay fees off top line, which is very important, right? So the brand, as soon as you open a hotel, the brand is happy because they are making money on the revenue. Now, as an owner and an investor, you get paid off the bottom line, right? Off the cost. So you have to be aware of where that alignment can take you and where it disappears, right? Because brands obviously want great hotels to open because great hotels mean more revenue, but also they're not taking the risk because as long as there's cash flow coming in, regardless of how profitable it is, they will get it. So they are very incentivized to almost make you want to build in any market. And again, this is where some of that real estate education, obviously just experience with markets and doing the right due diligence will help guide you. But yeah, so I just wanted to add that as well.
Okay, thank you. So do you guys charge for consultation? So somebody was asking, this is I hope you guys don't charge us consultation. If you do charge consultation, ANPA is exempt, right?
Yeah, we're not going to charge a consultation fee. Like Chuchu mentioned, we're very passionate, obviously, about being successful and making money and making VANA Partners a very successful platform. But nothing would make us happier for other people to enter into the business. So to answer your question directly, we're not going to charge a consultation fee. We will certainly meet with anybody who wants to learn more about the space. And if this is something you also want to do on your own, we're more than happy to kind of share the lessons that we've learned in building this company over the last 4 years.
Thank you. I'm going to recognize our president-elect, Dr. Gertie Ayanwoke, to make a comment and ask a question. These are movers and shakers, the timber and calibers of AMPA. Do you understand?
Hi,
These
good
people can actually
afternoon.
fire me from doing this job. So yeah.
That's not true. Hi guys.
Hi, good
I'm
afternoon.
impressed. Congratulations.
Thank you so much.
Yes, this sounds so good. And I was just gonna ask, would you guys be looking to partner with businesses? Uh, the reason I ask is because AMPA has a business arm, and I don't know if you know that, but this is kind of a project that may be interesting for us to do a partnership with because we have some ideas that are similar. So if you guys are interested, and we can talk offline.
Absolutely.
Absolutely.
Music to our
They're coming
ears.
to Chicago. That's a good thing.
Yeah.
You're still
Okay.
coming, right?
Yeah, we're a sponsor for the conference and we'll have a booth and we'll have this webinar printed out for people
Uh-huh.
who want to come and ask questions and learn more. And then we can also talk more at length about the opportunities that we're seeing. So as Dubi mentioned, we do have a deal that we're closing. Unfortunately, the equity for that one is already spoken for, but we do have a pipeline of exciting opportunities that we would want to educate anyone on, and hopefully you'll be moved to participate and start your journey with us.
Yeah, I'm talking about bigger, more organized participation from
Oh no,
ANPA.
that's
Yeah, from
Dubi said
business.
music to his ears. That's more than music. I don't know what's what's better than the Davido music that Dr. Stanley was playing beforehand.
All right, thank you guys.
Thank you so much.
All right. The last question, I see a hand. That last question here is, what does an initial investment look like financially? How much are we talking about? Are we talking about $1 million,
Yeah.
100,000? We
Yeah.
are doctors. You know.
You make a lot of money.
Yeah,
No,
exactly.
that's everybody thinks that the insurance companies make a lot of money, maybe the hospitals. That so when we work as a doctors, who gets the money is the insurance company. But if any problem, they call us. We
Yeah.
take the blame, they take the money.
Yeah, to answer
I
the
think
question directly, I would say that the investment amount we typically look for in the lower end is $50,000. But our ideal check size is around $100,000. And hopefully, the individuals that invest in are accredited investors because that makes our lives easier. And like I mentioned, on $100,000 investment, I think just simplistically, when the property is stabilized, the cash yields for these investments are typically 12% and higher. So these things actually cash flow. And the hope is that over a 5-year period, if that's how you're underwriting it, that we're generating levered IRRs net to the investors of close to 20%. And
I
this is
think
off.
also do we touch on the actual timeline of disbursements, because I think I saw in the question. Again, maybe I can even speak to it. The good thing about these acquisitions is that we are repositioning some of these assets as extended stay hotels, but the renovations themselves are very light and not involved. So this is not a full development schedule like our development projects where it's, hey, you're putting money with us and it's taking us 2 years to build and refi, and then you're getting money. In most cases, using Lithia Springs as an example, these hotels, the renovation timeline is 2 to 3 months, to be
2 to 3 months. The property stabilizes within 6 months. And so, you're getting those stabilized cash flows within 9 months of investing.
Why you guys tell us about stuff we can't invest in Lithia Springs? You told us it's closed. Don't make us jealous now.
No, trust us, we've got the great thing about this industry, like Dubi mentioned, is that there is a fundamental demand supply imbalance for this product. And so, believe me when I say that there's no shortage of great markets to get into. And this is a great time to get into as well. I think when people look at the macro story, when people are a bit tentative, that tends to be the time to buy real estate because, hey, you're buying it at a great basis, and today's the cheapest time, to ever build or renovate housing, and that
The,
doesn't change.
the best time to buy real estate was yesterday, right?
Yes, exactly.
Exactly. Yeah.
The best
Hey,
time to build was yesterday as
you
well.
did mention something. I just want to make an accredited investor is someone that makes over $200,000, a single person or family of $300,000, or you have a $1 million in net worth minimum. So, and I think all these people here are accredited investors. These are the movers and shakers. So I think they're
Fantastic.
good. All right, the next person is my friend Augustine Onkwe. Please go ahead and ask your question.
Oh, thank
Hold
you
on a
very much,
second.
sir.
Hold on a second, Dr.
Hold
Stan. I
on.
see some questions here about the installments. The 100,000 is typically paid upfront because it's an acquisition. And so just to answer that question directly, you're typically paying $100,000 upfront because it's
Closing
an
in the last.
acquisition.
Yeah.
And then in terms of the disbursements, like I mentioned, for the first 3 months, we're renovating the property and typically transitioning from whatever the prior use was to an extended stay hotel. And then it takes us 6 months to stabilize the property to get to the 12% that we're kind of indicating you would get on a stabilized basis. You will obviously be getting disbursements throughout the investment hold period, or at the beginning rather, but it does take a while for the business plan to be executed and for the hotel to stabilize. So
Yeah,
to be conservative, I would say you're reaching that 12% threshold that we're talking about, typically a year after investing.
All right,
And
thank
just,
you.
again, we say a lot of parlance, but, we're renovating the hotel, right? Which means essentially we have to empty the hotel. And then there's a ramp up period that adjusts because not only have we changed the brand, you're also changing the booking strategy to reflect extended stay business. And so obviously that takes a while to fully implement, but you will be making revenue as guests, come and stay in the hotel.
Okay, Dr. Owako, can you hold on? My boss just raised his hand.
Yeah,
I don't
because
want to
you've
be
ignored
fired.
me. You've
I don't want to
ignored
be
me.
fired.
So you've ignored me, but I have to
Oh
raise
my,
my
you
hand.
see, you people
That's
get,
okay.
hey,
Guys, Dubi and Chuchu,
Good afternoon.
congratulations. Congratulations. It's a difficult day. You know why. If you look at
Yes,
me, you
Because
know why.
Arsenal are
because
playing.
Arsenal are playing
Good.
go
right now.
Arsenal,
You
go
know why.
Arsenal.
Our
Okay.
dad is at the
So,
game.
yeah, I'm going back to the game, but I wanted to talk because before second half starts. Very excited. We're interested. Our president-elect, Dr. Nyangoke, spoke something about business arm, and we hope to see you in Chicago
We'll
and
be
get
there.
engaged. Yeah, please
Fantastic.
make it.
Thank you.
Thank you, everybody. And
Go
I'm still listening,
Arsenal. I
but I have
said go
Arsenal game to
Arsenal.
go
I go
watch.
said go
And we'll
Arsenal.
celebrate in Chicago, guys, next week. Thank
Yes,
you.
we'll see you next week, sir.
All
Thank you
right.
so much.
Yeah,
Thank
thank
you
you.
so much.
Thank you, Dr. Onkwe. You can unmute now,
Yeah,
please.
sorry, Mr.
Thank you very
Ogeson.
much. This is a brilliant presentation, and certainly this is what AMPA brings value to the table. But my question is really short. Have you even examined or explored? I know you're building in the US, but have you looked at Lagos as a possibility at some point
Yeah.
where you can fill a need? Because I'm sure all of you are aware of this dirty December and all this migration down there in December, where these young people, including my son, look for extended stay places that would, you know, sort of allow them to spend a week, 2 weeks at a reduced
Cost.
rate. Go ahead.
No, to answer your question directly, we're obviously very busy here in the US. So, it'd be disingenuous of us to say that we spent a lot of time thinking about Lagos. We're very busy here, but we do recognize that there's a true business opportunity in Nigeria to provide extended stay hotels. And, I think the way we would think about it is that we would actually want to, reposition existing assets
That's it, exactly.
within the city towards extended stay. We don't even think the right strategy would be to go build ground up. We would go find, potentially even apartment buildings that are underutilized and actually convert them to extended stay and utilize the operating model that we've described. So it's a great idea. It's something that hopefully we can get to down the road. But for now, we're very focused on establishing the platform here in the US. But there's certainly a need in a place like Lagos and frankly, in any
Elsewhere.
country,
Yeah.
where housing is very, very expensive.
Thank you. Going back to the on the chat, can one invest with their IRA account? And also, second question, I think is, do you provide management of the properties also?
Sure. Then, so I'll take the management question first, and then I'll answer the IRA one. With regards to management of the property, we actually engage third-party property managers. So the property managers that we're utilizing right now manage around 165 extended stay hotels across the country. And this is a very important part of the business plan. I'm glad that you brought it up because unlike transient hotels where guests are staying for 1 or 3 days, like we've mentioned, you typically want to find property managers who really understand the extended stay operating model, which is to drive long lengths of stay. So rather than finding guests who will pay you a lot of money for 1 to 3 day stays, you really need property managers that understand that in order to make money in this business, you're trying to find that traveling nurse that will stay at the hotel for 60 days or the construction crew or somebody who's in need of temporary housing. So that's a very, very big part of our business plan. It's something that we've spent a lot of time educating ourselves, and we think we found the right property managers to execute our strategy. So yes, we will be utilizing third-party property managers. We do not personally manage the properties. These property managers are paid off a percent of revenue. And like I mentioned, it's a very, very important part of the business plan. With regards to the IRA account, I don't see why you would be precluded from investing within your IRA account. But that's something I would encourage you to
Financial
diligence a little
advisor.
bit further, or we can get an answer back to you. But I don't see why you wouldn't be able to.
Yeah, I
For
think
the
the only
IRA, I
thing
know even for the multifamily housing investment, people do use your IRA account. You have to work with your account manager, and they will
exactly.
walk you how to do that. Speaking of that, I'll be remiss if I didn't mention that this is a wonderful discussion for those who are interested in multifamily uh, um, business. There's another webinar where we have a weekend of webinars this weekend before the convention. So that'll be tomorrow, and I'll send that information later. But I just want to continue. So if anybody have any other questions on a Stanley Stay Hotel, this is the time to ask. I'm very, very interested in this. Um, I don't see any in the
There's another
back.
question here about investors providing you just the cash.
Dubi.
Yes, it's that simple. You just wire us money and we take care of everything. But yes, on a serious note, it's a typical real estate investment which is structured as a GP LP structure. I don't know how familiar you are with real estate structures, but we're the general partner in the joint venture, so we're responsible for managing the investments, and we have limited partners like yourselves who invest into the deals.
I think when we get to Chicago, we need to talk to you guys about ANPA business so we can be one of your general partners for ANPA. We're very interested in that as well. So I think I have one more question for you guys. Does anybody else have any questions I want to raise? Oh, I'll need to recognize my other guy. I have some people though. I'm telling you, if I don't recognize them, I'm in trouble. I'm telling you, Dr. Larry Jimo, please lower unmute yourself. You can't just sneak in here and then I won't say anything and then you'll catch me in Chicago and then I'll get a fine.
You won't get a fine, my brother. You're in order. You've recognized the important people. I'm just the lowly paid treasurer. And Dubi and Chuchu are well known to me, and we're excited to have them in Chicago. Look forward to coming to your booth and learning some more. This has been very educative. I'm also watching the Champions League final. So, but you know, this is
I
very
appreciate you
important.
making time
I was
for
about to
us.
say, I really appreciate everybody who's paused the game
Yeah,
for even
yeah.
1 second.
Stanley is not a soccer fan, so he picked.
That's the. I will show your video. I'll show your video. I have it. I have the video. I
No,
have the video. Ah. Okay. Thank you.
Thank you
Thank
so
you.
Thank you
much.
guys.
All right. Hold on. I have a hand up.
soccer on Saturday. Bring your Stanley.
Yeah, we have soccer on Saturday. For those who are, these are co-ed soccer. We have fun on Saturday morning in Chicago. So bring your boots, and it's co-ed, it's fun. We raise money for doing all of our charity work. It's not aggressive. We manage it very well. So if you want to have fun with minimal, no injury, I would like to recognize Dr. Ladije to ask his question.
Yeah, hello everybody. Sorry, I came into the session pretty late. I just wanted to ask if this meeting is recorded and if we can get the recording so I can listen to it from beginning to the end. I came in towards the tail end. I thought
Yes,
there was a lot of good things that was said, and I'm very interested. So I just wanted to have the whole picture.
yes,
Fantastic.
all AMPA Foundation webinars are recorded and they are posted on the AMPA YouTube page with AMPA youtube.com/AMPA. So I'll post that and the information will be shared later on. Any other questions, guys? We have about 10 minutes to spare. All AMPA Foundation webinars are only 1 hour, and that's how we keep it that way. So respect your time. This is the best use of your time. Even those who are watching the games, I'm just saying. I don't know. It's a little it's an inside joke between me and Larry and Cliff. Anyway, that's a different thing. That's why they keep rubbing it in. If there are no other questions, I would ask if Chuchu and Dubi have anything else to add.
I can see some questions. There's somebody who just asked, how do we contact the Ajukus?
Oh, this
So, Dr.
on your
Stanley,
screen.
I'm guessing you will circulate this presentation after the call to the wider group. But yes, in the
Yep, yes.
presentation, you'll see a QR code that links directly to our email addresses. So please feel free to email us at our respective email addresses, and we'll answer your questions.
So I'm also projecting that QR code on your screen. If you're on your mobile device, you can do a screenshot of it right now and take that.
And it also
But
has our emails underneath. So it's just
yeah,
simply our
yeah.
names at vanapartners.com. So we're more than happy to, talk to anybody who reaches out to us. And
And if you miss that, I'm your backup here. So I'm gonna conclude by saying we want to invite you guys tomorrow to. This is one of the benefits of AMPA. I hope you paid your dues. Dr. Larry Jim was going to start checking the dues before you join this benefit. This is the AMPA benefits, okay? Bringing you guys all these wonderful ways to make more money. So tomorrow we're talking about the other asset class or real estate in multifamily housing, and that will be anchored by Excite Capital Investment. And I want to post this again if in case if you did not get a chance to do a screenshot. This will be recorded. It's being recorded, and we're gonna share that. I don't think there's any other questions. I'm gonna say unless Chuchu or Dubi, anything else you wanna share with us?
No, I mean, like Dubi said, we're passionate about this space. We can talk about this for hours. So please don't feel hesitant to reach out. There's no such thing as a dumb question or wrong with learning about a new space. So we just want to be a resource to all of you and help you on your journey in economy extended stay.
And we'll be in Chicago next week. For those of you that will be present in Chicago, like Chuchu mentioned, we'll have a booth. And so please feel free to stop by the booth, and we're more than happy to talk about extended stay hotels. And we do have a raffle.
I was about to say, I forgot to mention the raffle.
We are doing a raffle at the conference. So, like I mentioned, a strategic investor in our platform is Starwood Capital, and Starwood Capital owns the One Hotel brand. I don't know whether everyone here is familiar with the One Hotels brand, but it's a five-star hotel brand with various locations across North America and globally. And so we'll be offering a 2-night stay in certain cities across North America. So hopefully you can participate in the raffle by coming by to our booth in Chicago.
An opportunity to learn about a great space and win a weekend getaway at a five-star hotel. I think that's a no-brainer. That's a great risk-adjusted
I am
return.
definitely coming to your booth. Hey, I have a question. Do you guys play soccer?
Not very well.
No.
We're going to need cheerleaders though, male cheerleaders, so that when I dribble Landry, I have videos where I dribble Landry. I run circles around him. So I need some people to clap for that. Dr. Gertie, do you have any closing comments before we end?
Oh, just thank you, Chuchu and Dubi, for coming and making this presentation.
Thank you so much for having us.
Our members for tuning in. Thank you, Dr. Okoro, for always bringing this education to us. We really appreciate you. And then I meant it, Dubi and Chuchu, for us to meet on the sideline and talk more business. Okay.
Sure thing. Fantastic. More than
All right.
happy to do that.
All right.
All right.
Thank you so much.
Thank you so much,
Everyone have a great weekend. And again, thank you so much for making time for us on a Saturday afternoon. We really
Go
appreciate it.
Gunners. All right.
I appreciate you
Thank you.
guys. Thank you very
Thank
much
you so much.
for coming. I learned a lot. I'm very excited, and we'll talk again about Atlanta. There's a lot of opportunities in Atlanta. I'm all in. Again,
Fantastic.
thank you. We'll see you guys tomorrow, 6 p.m.
6 o'clock.
6 o'clock. We'll be sending that information about the other class. I mean, this is great information. Thank you. Have a wonderful, wonderful weekend.
Thank you so much. Take care.